What's going on, guys? It's Jimmy here. Welcome to our daily show where we discuss everything going on here in our country that you need to know about here on a daily basis. And as we go forward here, more and more states are finding ways to send money back to their residents, to you guys. And this comes because of a couple different reasons. Well, number one, $350 billion went out to of the states from the last stimulus package. So this meant that every single state got over $1 billion. The larger population states like New York, Florida, Texas, the larger population states got over $5 billion. Again, it just depends on the population of your state. It's about proportionate to the population. So larger populations got more money, but it's still about equal based on how many people are in your states, if that kind of makes sense here. Also, is that pretty much every single state right now is bringing in a surplus of money, extra money. Okay. This is because unemployment right now is at a 50-year low. A lot of people have just gone back to work after the pandemic, and also because of inflation is high right now at a 40-year high or so. And this has caused a lot of more people to go back to work to try to help keep up with the rising costs of, well, everything, right? Gas, food, everything, rent, what isn't high in price right now. So a lot of people have gone back to work. Unemployment is at 3.5%. And this means that states and the federal government are bringing in more tax revenue. Okay, so states have a historic surplus right now. Each state is bringing in more money now than they have in a long time. So they're bringing in more money than they spend, and they have budget surpluses. So a lot of states are um, giving money back to their residents. We have about half of the states, give or take, somewhere around there, that are giving back stimulus checks, tax rebate checks, property tax rebate checks, and all sorts of different creative ways to send money back to their residents. If you've been watching my channel here on a daily basis, you know I'm trying to cover here as many as I can here. And I'm going to cover here some more here right now. So make sure you're subscribed to our YouTube channel. Click the subscribe button down below if you haven't. It's completely free to do so. And click the bell icon so you get notifications when we go live. And if you've already done that, you can just click the thumbs up for us to help support our channel. Here we go. Okay, here is a new one. The state of Alabama. State Representative Danny Garrett says the legislature will absolutely discuss tax rebates, saying, quote, the state is awash in cash, which basically every single state that I have seen is, quote, awash in cash right now. Yeah. Last week, State Senator Arthur Orr, a Republican from Decatur, said the extra cash in the state's education trust fund should be used for tax rebates to help Alabamians who are struggling with inflation. After July, there was $9.7 billion in available funds, almost $10 billion, which is well above the total yearly obligations of $9 billion. Friday, on the Alabama Public Television's Capitol Journal, another Republican representative, Danny Garrett, advised that the tax rebates would be on the table next legislative session, saying the state is awash in cash. This is what I'm hearing this from most states. Every state has extra money. That's what's happening all across the country. Most states are running huge budget surpluses. Surplus means extra money. Deficit means they don't have extra money. They're running, in the negative because of all the federal help and assistance from COVID and also from low unemployment. So yes, we have a lot of cash. We've not spent it in the last couple of years. What we could have spent according to budget formulas we have. And really with inflation now, a lot of people could use the money. I think we will absolutely discuss tax rebate, which is basically checks back to the people. We're actually looking at the tax structure. We'll be looking at really from the long-term structure what makes sense. So I think it's something we'll discuss. He said that some form of tax rebate is likely. They cautioned that it was possible that some things could come before the next session. Also, another thing a lot of states are doing here, I'll show you, is child tax credits on the state level. So there's the federal child tax credits, and which is going to go back down to $2,000. You got to file a tax return to do that. Even if you don't, even if you're not required to file a tax return, you can still file a tax return and get a $2,000 credit per child. But a lot of states have state child tax credits that will send you money for having a child, basically, as well. And here are the states that are giving money for children as well to basically help you pay for them. These are the current states planning to send child tax credit checks to families. Note that not all are fully refundable, which means that you may need an income to receive the full amount owed to you if it doesn't say they're fully refundable. Okay? So if they're not fully refundable, you just need an income to receive the full amount owed to you. Okay? First state is California. Families who earn less than $25,000 are eligible to receive $1,000 either as a reduced state tax bill or a refund. Those earning between $25,000 and $30,000 would receive a reduced credit. The credit is only available for children under the age of 6, and the family must qualify for the California Earned Income Tax Credit, also known as the Adult Tax Credit, but this would be on the state level for California. State of Colorado, starting in January, this January, families with incomes of less than $75,000 or $85,000 for married taxpayers filing jointly could get 5% to 30% of the federal credit for each qualifying child, which would be, I don't know, probably a couple $100. This credit is only available for children under the age of 6. The state of Connecticut, eligible families can now apply online, can now apply for a one-time tax rebate to receive $250 for each child under the age of 18, up to $750 for 3 kids. Here's who qualifies. Couples filing jointly who made less than $200,000, single filers up to $100,000, and head of households up to $160,000. Florida, 59,000 families will receive $450 per child. It's unclear who at this time is eligible. Foster families can also receive this money. I think those checks just went out here recently. Let me know in the comments if you got that. Georgia, in response to its decision to ban abortion access in the state, Georgia will now let taxpayers claim their unborn fetuses as dependents on their tax returns. That's interesting. Taxpayers can get up to $3,000 for the 2022 tax year if they've got an unborn child with a detectable heartbeat between July 20th and December 31st. Families could be eligible to get $205 for each qualifying child with Idaho's non-refundable child tax credit. The state of Maine, taxpayers are eligible to claim $300 for each qualifying child and dependent under the dependent exemption tax credit. Qualifying children and dependents are the same as those who were claimed under the federal child tax credit. And if you know any friends or families who are in any of these states, share this video with them. There's a share button down below. Maryland, those who make $6,000 or less could get a $500 refundable tax credit, which means they'll just cut you a check for each qualifying child under a bill approved by Governor Larry Hogan. Massachusetts, families are eligible to receive $180 for a one-time dependent or $360 for multiple dependents. To qualify, dependents must be under 12 years old. New Jersey, the newly passed New Jersey Child Tax Credit Program gives families with an income of $30,000 or less a refundable $500 tax credit for each child under 6 years old. Households earning up to $80,000 could qualify for $300. New Mexico, families could be eligible for $25 to $75 per child, depending on income. Beginning in 2023, which is next year, it's 2023 just seems like it's so far away, but it's it's not. Tax year and continuing through the 2031 tax year. Now that's far away, or at least it seems like it. New York, eligible families can either claim 33% of the federal child tax credit, which is like, I don't know, about $700 at this point, if it goes back to 2000, and the federal additional child tax credit for qualifying children of $100 for each qualifying child. North Carolina taxpayers can receive a deduction of up to $2,500 for each qualifying child, depending on income and filing status. Wow, that's a lot. $2,500 for each child. Wow, good job, North Carolina. Oklahoma, households with income less than $100,000 are eligible to get 5% of the federal child tax credit. Rhode Island, families could receive child tax credit rebates of up to $250 per child under the age of 18, maxing out at 3 kids. Eligibility caps at $100,000 single filer, $200,000 for joint filers. These checks will be automatically issued to those who are eligible beginning in October. The state of Vermont, with income less than $125,000, eligible for $1,000 per child, but only for ages 5 and younger. That's still pretty good though. Now, as I mentioned in like one of my last videos or so, you would need to file for this particular program. You know, this is just one of the programs. You know, there's adult tax credits, child tax credits. There's all sorts of different type of like write-offs, basically. It's kind of how this is. If you don't file a tax return, in this case, a state tax return. For the child tax credit, it's a federal tax return. For adult tax credits, a federal tax return, or even a state tax return. You got to, in this case, you got to file a state tax return. If you don't file a state tax return, you will miss out on this money. Okay, so there's a lot of people that don't file tax returns. You might not be required to, but you may want to, because you might be missing out on money that the state or the federal government may give you. Okay. So even if you're not required to file, you may want to. And again, I can't give you tax advice. So this isn't tax advice because I don't know your specific situation. I'm talking to tens of thousands of people here. So to keep that in mind. But if you think you might be eligible for something like this, if you have children, even if you don't, even if you're an adult, there's low income tax credits. There's all sorts of tax credits for basically all sorts of different situations. So when tax season comes around, or even if you're not, you can always file for 2021 as well. But if you have children, you probably want to file. Remember that last year there was a $3,000 to $3,600 child tax credit, and you have to file to get, even on the federal level, you have to file to get that money. Okay, so just keep that in mind. If you don't file, you're gonna, even if you got the monthly payments, the other half of the money comes from filing, $1,500 to $1,800. If you don't file, you're flat out missing out on $1,500 to $1,800 per child. So make sure you file to get that money. I'm trying to help as many people as I can. And really, there's another thing called the adult tax credit where you can get up to, I think it's $6,600 for low income adults, which is, again, can just be money that comes back to you, money from the federal government as well, for low income adults. So that is something as well that a lot of people, if you're working, if you have a low income, you might qualify for. So yeah, a lot of people just kind of miss out on this stuff. And in a lot of cases, it's free money from the states, from the government. If you've ever heard the the phrase, there's no free lunch, there's no free money, that's not really the case. because there really is. If you just kind of know, if you ever hear like the phrase a savvy businessman, they know just like stuff like this. They know like all the tax in and outs and tax, loopholes. I mean, look at businesses like Amazon who make $11 billion in income in 1 year and pay $0 in tax. That's not an accident. It's just because they know they hire, really good accountants, and they know every single box to check and what to write off, basically. Okay. A lot of average everyday people don't know about these things. Okay. So, and a lot of people that like make up below a certain income don't file, or even people that do file miss out on a lot of these write-offs, basically. Okay, a lot of people think about write-offs as like only for people with businesses or for businesses, but it's kind of the same thing. When you go to tax rebates, and these are basically write-offs for people. Okay, or things to claim, deductions. Maybe that's a better word that people are kind of like used to. If you don't claim these deductions, you're just missing out on money. Are just missing out on money. Just like if you put money in your 401k, if you put money in your HSA, if you put money away, in your savings account, your IRA, your 401k, that's a deduction for you as well. So if you put $1,000 in your 401k at your employer, that's actually $1,000 less than you pay in taxes on your income as well. So it's like a double-edged saving. So you pay $1,000 less in taxes that year. So if you made $50,000 that year, you're going to, instead of paying taxes on 50,000, you'll pay taxes on 49,000. So it's actually a pretty cool thing. Yeah. So this, and again, you put money in your 401k, it grows over time, and you just leave it in there. You leave it till retirement, and that's how it grows. You don't get scared when the market goes down a little bit. The stock market goes up, goes down, goes up, goes down, but over the course of time, it goes up significantly. It grows. It's like a savings account. You just let it grow. And plus, you get those nice tax write-offs. Basically, you're not paying taxes on the money now, and it grows over time. That's as opposed to a lot of people just don't save anything. And plus, if you put money in your 401k, hopefully you're at an employer that gives you a match. So if you put that 1,000 in, maybe they give you a match of 50% or something like that, and they're giving you half that money for free. They're giving you a match of $500. Or if you're putting in $5,000, they're giving you a match of $2,500, and you're not paying taxes on that $5,000. So it's like a double win. And then the money's going to grow tax free for all those years, and it really becomes something substantial when you go to retire. So all these things kind of work out, if you're just letting things kind of grow and snowball towards retirement. Let me know your thoughts here in the comments. I'll keep you up to date here with everything going on here in our country on a daily basis. So make sure to subscribe down below to our YouTube channel. It's completely free to do so. New videos come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. Click the bell icon to get notifications. And to support our channel, click the thumbs up button. It's completely free to do so, and I'll keep you up to date here. You can click here to see about August 31st, going to be a really important day coming out here. And click here to see what Joe Manchin just did, and also my wife's in that video as well. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.